Today we see a very sharp drop in both the SPY and the QQQ, as well as in many other stocks that are on our radar. So is this reaction just the start of a new bear market, or is it just an overreaction designed to make us panic and despair? Well, in today's video, as always, we are going to study the market together, reading it based on technical evidence, without guesswork or assumptions, because this is the Finance Hydra channel where you receive bias-free market analysis every single day. My name is Nathan. Welcome to another daily study. Let's try to understand what's happening right here, right now, in order to develop our next strategies. So, regarding SPY, the SPY ETF, we see a massive drop. We are trying to make a top signal. Yesterday's candle was certainly bearish, was a bearish reaction, but Nathan, yesterday we went up 0.58%. Yes, we did. However, the candlestick was clearly bearish. We left a huge wick, a huge shadow above the candle's body over here, suggesting a lot of weakness. Right now, we are not only losing yesterday's low, but we are also losing the 21-day EMA, the exponential moving average on the daily chart. What's more, we are closing this open gap over here at 592.60. By closing this gap, the SPY gives us the impression that this gap could be just an exhaustion gap, alright? So it is not looking good right now. So you may ask, so Nathan, is SPY bullish or bearish right now? Well, we are more bearish than bullish. However, we are still more like sideways. We are inside this congestion. Today's price is precisely the same price when in November 6th, all right? So apparently we are still moving sideways. But Nathan, we see a possible head and shoulders chart pattern on the SPY, right? This is a very dangerous and quite reliable bearish chart structure, right? Yes, you are totally right. However, this pattern wasn't triggered yet. Only if SPY loses the 586 area again, this yellow area over here, we could actually trigger this head and shoulders chart pattern, losing this purple trend line as well, right? Because this trend line is connecting the previous bottom levels on SPY since October 2023. Therefore, by losing this trend line, by losing the 21 weekly moving average, by losing the 586 area, triggering this head and shoulders chart pattern, then and only then we are going to technically enter a bear market again, medium term speaking, on the daily chart, all right, suggesting a sharper correction on the weekly chart. In this case, our next technical target will be around 564, 563 down here, all right? But so far we are still above very important support levels. Yes, we are missing a few support levels on the daily chart, on the 1 hour chart as well. We just lost today. Today we lost the 21-hour EMA, closing this gap over here, but we have yet to see a clearer bearish reaction, all right? But we also have to see a meaningful bullish reaction as well. As far as I know, as long as the SPY remains below the 602 resistance level, we are not going to turn very bullish yet. All right, so far we are still sideways, so pay attention to the resistance level at 602 and to the support area around 586, because that's the most dangerous inflection point for the SPY, medium term speaking. Only by losing this inflection point, we are going to technically enter a bear market, suggesting a sharper correction to the 564 again. All right, now regarding the QQQ, this one is not only dropping today, but losing yesterday's low, but it is also losing the 21-day EMA, closing the previous open gap, making this an exhaustion gap as well. On the 1 hour chart, we see the QQQ losing the moving average. We have yet to see a meaningful bearish reversal chart structure, but if we lose the 509 support level, there's no deny. We are going to technically enter a very strong bear market on the daily chart, suggesting a sharper correction on the weekly chart, maybe to the moving average, maybe to the weekly moving average, which is right now very close to the $500 area, which was a previous top level, now future support level, another classic example of how the principle of polarity in technical analysis works. Therefore, by materializing a sharper correction, the $500 is going to be our next short-term support level, but if you ask me, we could lose this support area and retest the support line of this ascending channel on the weekly chart, suggesting a sharper correction around, let me take a look, around 6% from where we are right here, right now, today. Therefore, we gotta pay attention. We gotta pay attention to the 509 support level on the daily chart, and of course on how the price action will behave right here near the moving average, because the moving average right now on the QQQ is flat. Another technical evidence that yes, the market is sideways. Okay, we are not necessarily bullish, but we are not necessarily bearish. There is no technical evidence, there is no meaningful technical evidence supporting any of these theses, all right? We are, for now, more like sideways than bullish or bearish. Therefore, we gotta pay attention to the most dangerous inflection points on the SPY and QQQ and how these moves are going to affect Nvidia, for instance, or stocks, for instance. Let's start with Nvidia, because Nvidia looks insane right here, right now. I mean, we went up today to the point of making a new record high. We made a new record high today. That's very good. But look at this candle. Look at this candlestick today. It is a massive bearish candlestick pattern, and right now we are just dropping to retest the $141, which was the previous pivot point, which was a classic buy signal, by the way, over here, suggesting that yes, Nvidia was and still is quite bullish. However, today's reaction is very dangerous for two reasons. First, it is too intense. It is a massive bearish candlestick pattern. Second, yesterday we saw a top signal. All right, we saw a top signal, and guys, Nvidia is a very good example of how to use technical analysis properly and the importance of using it in conjunction with a defined strategy. Just take a look at this. Yes, yesterday I told you guys that Nvidia was a sell to me, in my humble opinion. But allow me to make one thing clear, because yesterday I read a comment on yesterday's video saying, oh, are you saying that Nvidia is a sell right now, Nathan? Are you crazy? But what if Nvidia jumps? What if Nvidia explodes tomorrow? Well, that's not the case today, all right? But I could be wrong. Of course, I could be wrong. Nvidia could have exploded today, retesting the 157 or maybe higher levels, but it is dropping today. But even in that case, even if I'm wrong, even if I were wrong in this scenario, that's not a problem, because we always work with strategy. Remember, the plan is not to be right all the time. I will be wrong eventually as well. As far as I'm aware, my accuracy is around 70%, meaning I'm right 70% in this market. So being right all the time is out of the question, is not the ideal scenario, okay? That's not what I'm seeking for myself right here. What is truly important is that we have a crystal clear strategy that makes us profitable long-term wise, okay? I just want consistency in the long term, because we are not here to make money today or this week or even this month. Maybe we're gonna have a very bad month, but that's not the problem. That's not a problem, because eventually, if you have a solid strategy that gives you an edge in this market, you will be fine, all right? Because you work with risk management, you know how to trade, you know how to buy, you know the reasons that make you buy in this market. Therefore, if you have a crystal clear plan all the time, that's okay. You will be fine, all right? So, guys, we can't predict the future, but we can react properly to what we see right here, right now. And so that you understand what I'm going to say next, I'm going to give you a bit of context if you are new here in this channel. I run an educational project called the 5% Project, where our members have access to exclusive trading signals and strategies. All right. There I always share trades explaining in detail the entry point, the reasons that lead us to buy or sell, always trading with a clear strategy and risk management. And the Nvidia triggered a very nice buy signal for us down here near the $132. All right, $132. And after more than 2 weeks, our target was hit yesterday. The trade was a success, but the real question is how to proceed when we see the price reaching our target. And I did share 3 possible strategies for you guys to use, to apply in practice in this scenario. Okay, we saw Nvidia yesterday near a crystal clear resistance level, near the all-time high, around our target. All right, so what's the plan? You have 3 possible strategies to use. First one, you can sell. First, just sell. There is absolutely nothing wrong in selling it. Oh, but what if we see Nvidia exploding? All right, you still made money. That's not a problem, because some people are so afraid of missing the opportunity that they don't think clearly. All right, that's okay in selling. Taking your profits, all right, booking your profits over here, that's totally fine. Second strategy, if you believe that Nvidia could seek higher levels, just set a trailing stop loss. What is a trailing stop loss, Nathan? You set a stop gain. I'm so sorry, a trailing stop gain. You set a stop gain below the previous candle's low, in this case 147.82, and this is it. If in the following day we miss this trailing stop line over here, all right, you're going to book your profits, okay? Totally fine. If we don't, you move your trailing stop gain to the low of the next day's low, and goes on. And this is how you use the strategy, okay? You always move your stop gain to higher and higher levels until the market cashes you out. That's a very simple strategy to use if you believe that, okay, I still see more upside potential. I know we hit our target, but I still believe we could go to higher levels. That's okay. Trailing stop gain, use a classic trailing stop gain strategy. Third strategy, do both, all right? You may just sell partially, do a partial sell 50% of your position when we hit our target, and then you set a trailing stop gain to the remaining 50%, or to the remaining 80%, or 20%. And if you are too anxious in this market, you can sell up to 80% of your position, and that's it. Keep the rest of your 20% and set a trailing stop gain, and that's it. That's it, all right? There are many crystal clear strategies we can use in this market all the time, because we can't control the market, but we can control our risk management. We can control our strategies to use. And if you are new in this channel, know that you can join the 5% project for free for 7 days, all right? It is absolutely free. Okay, you can see for yourself. I told you guys yesterday how to use this strategy. You can see for yourself, see if we can actually help you, because I'm not going to charge you for 7 days, no strings attached. All right, so join the 5% project, take a look at our signals, at our strategies, see if you can take advantage of what we can offer to you. I always try to offer a very good quality service to you guys first, and then you decide if you want to join us for real or not. Meanwhile, take a look at our website. The link is in this video's description, right here below this video, all right? Just take a look, see if you like it. See if you like our educational project. Now, you may ask, but Nathan, I know, I do understand how to trade strategically, how to trade using a crystal clear strategy, how to trade using risk management, but what about now, right here, right now? What about Nvidia today? Well, today, there is absolutely nothing right here. Nvidia is still above the moving average. It is still we have yet to see a crystal clear materialization of a bearish reversal chart structure on the 1 hour chart. All right, so far I don't see Nvidia for a meaningful short, but it is certainly not a buy right now as well. Therefore, what I recommend to our members is to wait on the sidelines for the next meaningful buy signal or sell signal. For now, there is nothing. As Jess Livermore, one of the greatest traders that ever lived, once said, there's a time to go long, there's a time to go short, and there's a time to go fishing. All right, right now, I don't see anything. So let us allow the big players over here to fight over Nvidia, and after the fight is over, we'll see, we will decide which side we are going to join. That's the benefit of being a retail trader, a retail investor. We can just wait for the fight to finish, and then we decide how to proceed. All right, now Tesla stock is making another bearish reaction. We saw a bearish pivot point over here. By losing the 414, we triggered a lower high, lower low, if you ask me, by triggering another bearish pivot point by losing the previous support level around 300 and $73. We are going to just resume the bearish sentiment, possibly retesting the $358 again. We have another technical support level around the moving average on the weekly chart. So one of these two support levels could hold the price next. We don't know which one. Maybe none of these support levels will hold. Maybe Tesla is heading towards the $300 next. But so far, these are the most important support levels to watch in Tesla right here, right now, okay? There is no meaningful buy signal, but what's more, as long as we stay below the 414, Tesla is not going to make anything meaningful for us. Therefore, Tesla is certainly not a buy at the moment. It is below the moving average. It is making another bearish reaction, so it is not looking good at all. Okay, it is definitely not looking good. In order for Tesla to have a chance of resuming the bullish bias, we gotta break and close above 414. As long as we don't see that, Tesla will maintain the bearish bias. AMD is surprisingly bullish right now. Surprisingly bullish because I know we are dropping 0.72%, making a bearish candlestick pattern today. However, look at this support level. There is a triple support level in this area made by the 127.51, the previous top level from December 24, Christmas Eve, previous top level. We saw a breakout. Right now, this top level is acting as a support level again. Another example of the principle of polarity in technical analysis. The next support level is the 21-day EMA, the exponential moving average on the daily chart, which is right around 127. What's more, on the 1 hour chart, AMD is making a sideways correction, retesting the moving average as well on the 1 hour chart. Therefore, there is a triple support level on the 1 hour and the daily chart after the breakout of a bullish pivot point. What's more, on the weekly chart, we saw a bottom signal above the 121, meaning AMD is a quite promising stock right now. It is in bullish territory for the first time since December, all right, December 4. So we are trying to reverse the bearish sentiment over here. We are doing a very good job so far, but today's reaction is quite alarming, okay? We gotta see a meaningful bullish reaction as soon as possible, preferably tomorrow on AMD, breaking the 132, then we can see AMD flying to much higher levels, closing this gap, retesting the 144 area again, all right? So that's the plan on AMD. Right now is bullish. However, what's the key point? That if AMD loses, if AMD misses, is going to actually frustrate the bullish bias over here. First, by losing the 127 again, it is not going to be a good signal. And the last support level is 121. If we lose the 121 again, it's over, all right? We are going to make another bearish reaction near this weekly support line, so it is not going to be good. So 127, 121, these two key points are our most dangerous inflection points, short term and medium term wise. Therefore, let's pay attention on these key support levels. So far so good. We are maintaining the uptrend. Regarding Palantir, this one is finding a support level where? Guess where? You have one chance. The $71 area, which is the most important support level for us in Palantir. We have been talking about the $71 area for a very, very long time right now. And right now, its price is retesting the support levels. It is trying to stabilize above the $71, okay? It is trying to. However, there is no technical evidence suggesting that it is going to find a bottom level over here yet. But Nathan, what if Palantir loses this support level? If Palantir loses this support level, it is not going to look good because we see possible head and shoulders chart pattern. By triggering this head and shoulders chart pattern, Palantir will technically reverse the medium-term trend, seeking lower support levels. The technical target of this head and shoulders is the size of the head projected in the direction of the breakout of the neckline, suggesting a drop to the $58, $59, technically speaking. What's more, on the weekly chart, we see the moving average around the $58 right now. So, okay, this idea reinforces that by losing the $70, we are going to drop to the $58. Yes, that's totally correct. What's more, by using Fibonacci over here, we see the 38.2% Fibonacci's retracement. The first retracement is around $59 as well. Therefore, this area around $59, $58 is going to be a triple support level and a very good technical target for us on Palantir. Imagine if Palantir drops to this area again. What are you going to do? Are you going to buy more? Or are you going to panic and sell more? Just leave a comment, all right? And by the way, subscribe to this channel. If you are still watching this video and you are not a subscriber, dude, you should subscribe because this channel is clearly for you. You like technical analysis, you like how we analyze stocks over here, you like our style, therefore it is too late. You are watching this video for 23 minutes. It is too late for you. Subscribe to this channel and click the like button to support me as well. Your like is very important to help this channel to grow. Alright, so like, every single like matters. Like this video, subscribe for more analysis like this. Let's continue our analysis because this video is not over. Now, Broadcom. This one is very interesting because sideways correction, okay, we are still maintaining the bullish bias just like Palantir, all right? It is still maintaining the bullish bias, but it is in a very dangerous position right now. This is Palantir's last chance to react. Broadcom is safely bullish. We are way above the moving average. We are way above the $211, the previous support level over here. So we are very bullish. Short term wise, we are inside the congestion, but medium term wise, there is absolutely nothing to worry. As far as I'm aware, any pullback to the moving average or to the $211 could be just another buying opportunity. All right. Therefore, these are the most important support levels. Any bullish reaction around its support levels will be an opportunity to buy because we gotta buy near support levels, sell near resistance levels, buy near support levels, optimize your risk management, okay? That's how we work here in this channel, and that's how we work in our Telegram channel with the 5% Projects members. Now, regarding ARM holdings, this one is looking quite impressive because I was trying to nail a bottom signal on ARM holdings over here. We at the 5% project were trying to nail a bottom signal, but this one just exploded too quickly, too fast, all right? And right now, any pullback to the moving average or maybe to one of its Fibonacci's retracements could be just another buying opportunity, but so far, I don't see any meaningful opportunity right here on ARM Holdings. Maybe we see the possibility of another bullish pivot point, another higher high, higher low, but we gotta break the previous top level around 150 in order to materialize another bullish rally, possibly to the 164 or maybe even to the 160, $173 again. All right, so for now, short-term wise, it is bullish. Medium-term wise, it is making an insane rally over here. I don't see any meaningful opportunity, but I don't see any opportunity to sell as well. So it is a delicate position. Just as Nvidia, I prefer to stay on the sidelines over here and I'll wait for a better, clearer movement. And regarding MicroStrategy, this one is trying to make a top signal today. A very dangerous one, by the way, because this candle pattern has a name. It is a below the stomach candle pattern, which is a quite reliable bearish reversal chart structure, losing the moving average, losing the $338 again, the previous top level, the previous support level, now another support. Now it is acting as a support level again. All right, so by losing these key points, by making a below the stomach chart pattern, candle pattern, MicroStrategy could correct to lower levels, retesting the $279, closing this open gap over here. That's where I see MicroStrategy. If we lose, if we actually trigger this top signal on the daily chart, on the 1 hour chart, we see just a sharp correction, losing the moving average, but there is still hope for a reaction. All right, there is still hope that MicroStrategy could react, but by losing today's low, tomorrow or in the next few days, MicroStrategy will look very bearish. Again, I'm gonna keep you guys updated on this channel on many stocks: SPY, QQQ, Nvidia, Tesla, AMD, Palantir, etc. So again, subscribe to this channel, click the like button to support me, and join the 5% project for more trades, for more signals, for more strategies. Thank you very much for your audience, my dear friends. See you guys tomorrow. Stay safe. Bye bye.